Welcome to the Trading Lounge, and we're looking at the S&P 500 here on a monthly chart, and we've viewed this for quite some time. We've got this particular pattern here on the monthly, and it's going over quite a few years here, as you know. So look, we've got this triple top through here, and that's touched on there quite nicely now, quite evenly. So in one way or another we would have to expect some sort of reaction there. The question is do we have a top in place here, or the current move that we're experiencing to the downside after the last say three sessions, is it corrective? Are we looking at something like this here with another push to the upside like this, or are we going to have an impulse wave here? So what we're trying to work out right now is that if we get an impulse wave here, then that we'll be getting a 3-wave counter trend here, and then we'll get another 5 down through here. So that's what we're looking at the moment. And when we look at this first particular move down through here, on the 2-hour chart here, we've as you know, yesterday we were looking at this move coming down through here, and it counts quite nicely as 3 waves to the downside, and we were looking for a 4th wave to come back, and the 4th wave normally comes back 38.2%, so it can come to or the 4th wave one lesser degree. But look, it is a little bit long, so it's a little bit tricky to sort of really get a grip on it as such. But on the cash market, this counts down as 5 waves, and on the cash market, this particular low here, I'll just see if I can do a screenshot of it while we're talking. So this low here on the cash market is below this low here, and that makes like wave 5 down. In fact, the rally that we've got here is smaller on the cash market than it is on the futures market or the CFD markets here. So it does count down nicely as 1, 2, 3, 4, and 5 on the actual index. So this is it here. So this is just a 15-minute chart. So down for 1, back for 2, a nice little 5-wave structure down here for 3, back for 4, and down for 5. So it's a really nice little 5-wave structure to the downside. So it's actually an impulse wave to the downside. So we should see, even though this looks a bit corrective here, we should see at some point here, probably off the 14.5 at the latest, a 3-wave bounce, and then another 5 waves to the downside. So in looking at this here, we would need to consider this too as 1, 2, 3, 4, and 5 to the downside, even though it hasn't made a new low here. We did have this label on our 4-hour charts as an A and a B and a C wave coming down now. So all that's sort of correct. We're on the case, but this particular market and the S&P 500 on the futures don't have the same nice rounded pattern as the index, the index does. So look, there is a bit of conflict there as well. So look, I think that in the scheme of things, if this 14,500 becomes the retested resistance, then we know that we've got a larger pattern to the downside. So that's one thing that we can look at. On the actual cash market, with the US indices, if we get support on 14,650, right? So it's been mucking around with that at the moment. So if we get that 14,50 there as support on the cash, on the index itself, then we can push up to the upside. So we're in a bit of a rock and hard place. One of the other things too, of course, is that the European markets have been leading to the downside for quite some time, and the Australian markets are kind of halfway between the the Dow Jones, the US indices, and the English indices, with our banks leading to the upside, and obviously our resource and materials leading us to the downside. So a bit of a rock and a sort of a hard place there as well. So when we do look at Europe here, we can, on the 2-hour chart, we can see that from the 8,000 here on the DAX, it's just been moving to the downside. I've counted this down as wave A and B here, and looking for C down lower through here with a 5-wave structure, the 1, the 2, the 3, the 4, and the 5 coming down through here. But it could also be counted as wave 1 and wave 2 for a bigger picture to the downside as well. So, you know, we just need to work through this a little bit more. The Australian market here, as you can see overnight, it hasn't really, you know, pulled down that much from the 5,000 there. So this little move that we've got down here so far is down in 3 waves. But if we get a break of 49.50 here, a move down through here, then we would have 5 waves down through here. And what that would mean a counter trend in 3 waves back up, retesting group 2 here, and then down from that point there. So the other thing to note is Thursday in a bull market is normally bearish, but if it's lower on lower volume, that means that the sellers are drying up, and we can expect Friday and Monday to follow through. And our banks look, you know, they're in that kind of position that they can push higher. So we don't want to. We can see that every day that we're getting, you know, 1% up, 1% down, 1% up, 1% down, and so forth. So we've got to try and filter out some of that noise. But filtering out that noise is definitely the material sector, the base metals and the precious metals to the downside, and the banks' finance sort of pushing to the upside. But in pushing to the upside, they need a bit of a catalyst for that, and they've really just been following the US banks. So if the US banks are going to be coming off, then our catalyst for holding our markets up, our banks, will disappear as well. Let's have a look at the commodities. Okay, starting with the gold market here, the wave 4 bounce is still underway here. We're looking at an A and a B and a C wave for wave 4, so we still expect a little bit of support to come in for this market. However, in due course, it will roll over, and target down here is a little bit closer to the 1280, 1250 sort of area through here. So yeah, you just really need to, I mean, you don't normally trade wave 4s as such. You know, when you're using Elliott, but if you do, just make sure that they're sort of fully matured. I mean, what I mean by that is that this is quite a strong move down through here, isn't it? So this little correction here doesn't really balance out this situation through here, even though wave 4s only normally have a shallow retracement level of 38.2, which brings it up to around the 1460. That little high in here actually, but they do normally work out the energy in terms of more so in time, where wave 2 will do it in terms of price, wave 4 will do it in terms of time. So I let it sort of mature and get some sort of just allow it to mature. It's the same thing for silver too, on top of the 23 here as well. It could certainly retest, normally a bounce off this area here would take us back to the 24, but the medium levels here. So, and that would be the wave 4 in this little group here. So anyway, let's just see sort of how that develops up there. If that's an A and a B and a C up through there, then we can look to short from higher up there, maybe 24.72 or something like that. So just a little bit more time for the gold stocks before shorting. The copper market is central to base metals, of course, and resources, materials, whatever. So yesterday we were also looking at a wave 4 back into this area through here. This is group 1, 30, 20 and 10, and of course the market always bounces around. It normally comes down, hits the top of group 1, normally goes back and finds supply wherever that supply may be, and it normally comes back to the 4 in one way or another, but in extensive cases it can go back to the 5 and retest the 5, just like the 25 we're looking at in silver, but normally this is the sort of the average that it does, and then it normally rolls over from that. But we always get these sort of these bounces within here. So even though it's not bouncing off this one here because it's already bounced off that, the same as it bounced off here and it didn't bounce off here this time, but it can, but it's not sort of the norm. But it will at the 10 here. So from the 10 we'll go back to the 20 there as well. So we've been looking at this. This is copper as gain here, just on the 1 hour chart, but we're just tracking the A, the B, and the C back in through to here, and we can see that this is still unfolding to the downside. Nice strong third wave here, so you've got the 1, the 2, third wave still unfolding. The 15, there's levels, just degrees of levels. So the 10 here, this is a minor level, the 20 is a minor level, and then you've got all the sub levels in here, which is just the Fibonacci numbers, the 1, 2, and 3, the 5 and the 8, and of course there's numbers in within all of that, but the 15, 5 being the second strongest number, would be the most important level here. And this is important for for BHP, then Rio, AGO, and on it goes. They will all be making new lows, and but you know that anyway. So that's that. The oil market. Okay, so we'd made this wave 3 here. And this is a tricky thing about wave 4. So we're looking at wave 3 here, and we're looking for a wave 4 to pull back to the wave 4 of 1 lesser degree, or the 38.2 retracement level, which brought it up around the, say, 89.30 or something, but obviously that's fine. It does count reasonably well as an ABC here, but look, you've always just got to be careful, because we could end up with something a little bit sort of larger as such, like this here, like an A and a B and a C here. I don't think that's the case, because this little wave 4 here was really quite simple, so I'm just kind of expecting this one to be simple as well, so we can bring this one back into place over here, and we can start counting 5 waves down through here and expecting a new low to come in below here, and that would bring us down to the 85. So just expect to bounce off the 85 at this low here. But still further down for the oil prices to come down further. Right, what else in here? Of course, BHP is going to be moving lower. That's fine. Gold's not kind of ready to short just yet. Again. Right. I just might go into our banking sector while we're here as well. This is CBA here, and this move that's been moving down through here, we've been considering this a wave 4 low, and as you know, we've been going long within all of these little things here, be it whatever bank you're looking at. Obviously for CBA, the 72 would be the next important level up through here. But without looking at all the banks, if we look at the XXJ, which is the banking sector, we can see that we've got this, this nice long structure in here. So we're considering this the fourth wave in here, which looks pretty apt as such, and this can be counted. We kind of knew it was a fourth wave because this move down through here was in 3 waves. The A wave was in 3 waves. That would make the B, that would either be the whole correction itself, and then this would be up for 1 and back for 2 and up for 3, 4 and 5 and so forth, or we can have this as an A and a B and a C. But in one way it doesn't matter, because we know that high will be taken out because of this 3-wave structure here. And when we look at this is the XXJ, when we look at the XFJ, which is the finance sector as such, we'll see that that's already leading the way through here. So we can see that we've already made a new high through here yesterday. So we'll see how we go with that. We've got up for 1, back for 2, 3, 4 and 5. So we do have a 5-wave structure here. So we've either got a top in play through here and we'll move down, or this will be a 3-wave pullback through here, which is probably more likely the case. Coming back in here somewhere, ready for next move up, because the other banks are not, they've got to sort of move up as well. So so this as we know, that the banks are leading to the upside and the materials are leading to the downside. All right, let's have a look at FX. Okay, starting with the US dollar here. Finally got our bounce off the 82 here, but that should complete this particular correction from here, but obviously this here gives the euro a top, and the top that we've been looking for, as you know, at the 132 has sort of come into play. So now we're looking at this move to the downside through here. So we need to count this as an impulse wave to the downside. So we're looking for some sort of corrective pattern through here, and then being able to short that through here. So shorts, if it retraces back up into this area here, the 103, the 130.72. And possibly the 131 is possible to move back up into this trend line as well. These trend lines have held quite nicely through here. So we'll just leave them there for the time being. If we look into this leg here a little closer, we can work it out. So from this high up here, we've got wave 1 coming down to here, wave 2 to here, nice little ABC here for 2, and then we've got 1, 2, 3, 4, 5 for the third wave here, the fourth here, and then 1, 2, 3, 4, 5 for this one here. So then we've got the A wave, the B in 3, a little bit, it's just finishing off the session here, so it's all a bit messy, but as I mentioned, that can retrace back to 130.72 and or in here as well. So if it does come back up through here, we'll be looking for a short up here to sell from this area and this area through here. If this, when the sessions start, so forth, if you see that the US indices, that the S&P 500 is going to be moving lower as well, then obviously be shorting from under the 130 here. But we do need to, we basically either from down here or from here, we need to see some sort of corrective pattern. Now, the euro can have very shallow retracement patterns as well, such as this wave 2 here pulling back up. It never pulled back up, 61.8% of that move there, did it? It's more like sort of 38.2 or something. So you need to find a way in. So this will be, this pattern here is pretty much the same as this one, and this one here is going to be pretty much the same as this one here. So we're looking, under normal circumstances, we'll look for that distance here, and then that distance here, that distance here, that distance here. It's, there's a equality between waves A and C, and we haven't sort of seen that yet because of the end of the session here. But look, we'll be looking to short from up in this area through here. The other way to look at this, I guess, is the US dollar as well. This is just a 4-hour chart, but if you pull this apart on a 5-minute chart as well, this will have 5 waves moving up through here. So we'd be looking for an A and a B and a C coming back through here, which it hasn't done yet. So this A, B, C here that's meant to come in through here will be the mirror opposite of what's going on over here. So look for that. The Australian dollar, it's still in its little impulse wave to the downside in terms of the 1, the 2, and then the third wave is still unfolding here. So from wave 2 here, we've got 1, 2 here. This is all the third wave. The fourth wave pulling back into here. So we'll see the fifth wave come down into here. I need to point out that the 102.72 here will play a role in this, not just the once here, but again over here as well as this wave structure unfolds. So down for 3, and A, B, C, for wave 4 pulling back to the wave 4 of 1 lesser degree, which should be just about the 103, sort of 11, 12 through here. And then further down through here as well. Sorry, with the euro as well, we sort of expect that if you're going to put in a profit target and do get a short in, you're looking down around 28.50. So look for that target point there. Obviously, this is following the base metals and the euro to the downside there as well. Alrighty, well, that's it. So if we do have a bear day on the indices today and stocks, look at the banks and so forth, and see if any move to the downside, if it's down on lower volume than it was yesterday. If it is on lower volume than yesterday, we know that the move down today will be corrective. If the move down today has got more volume than yesterday's volume, then we know that we need to be on that side of the market, because that's where the momentum is. The being created by the volume, of course. So look for that. Alrighty, well, good morning and good luck.